Hi folks, this is Sean Hyman from Chart of the Day, and I want to show you an indicator that professionals use to help judge volatility. Because routinely most traders put their stops too close to the market, and they don't know how volatile a pair is and how easily it can hit their stop. And so I just want to show you, and again, this will be on a daily chart. I think these are the most accurate on daily charts, my personal opinion. But let's look at how to judge the volatility in a pair. This ATR indicator, which is the average true range, will show you on average about how volatile a pair is by giving you a reading over here. It will also show you whether the volatility has been going downward or if it's increasing again. So that can help give you an idea of whether your stops need to be ever widening if the volatility is increasing, or if they can narrow some as the volatility goes down. Right now this is 2.3645, so this is trading about 236 pips a day on pound yen. And you can look at that by taking the average day and looking at the average top and low, and that's how you know how many digits over to figure on the number. So about 236 pips a day, and a lot of newer traders want to come to this pair because it's so volatile. However, volatility is not the new trader's friend. They picture in their mind winning 200 plus pips in a day. But for the newer trader, I would have to ask you, would you be comfortable with losing 200 pips day in and day out when you catch this pair on the wrong side? And so I want to show you some other pairs that might be better to cut your teeth on. Here's Euro Swiss. It's more of a range trading pair right now. Trades 33 pips a day. So when you're starting your very first trades and want to learn something there, that's one that you can use. Euro Pound is about 80 pips a day. Again, that's kind of a medium volatility. Now their pip cost is almost double what a typical pair is. It's one of the only pairings you'll deal with that has a significantly different pip value. And so 80 pips there is closer to more like 100, 150 pips on a typical pair. Let's look at some others. Let's see here. Here's some very volatile pairs. 243 pips on Euro New Zealand. And again, this will change periodically, but not materially typically. Let's look at one that's another kind of a medium volatility. Aussie New Zealand, 102 pips a day. I would encourage you to start off on pairs that are about 40 to 100 pips a day in their volatility, that have clearer trends. I would encourage you to stay away from very volatile pairs that are 100 and something, 200 and something pips a day. So if it's 150, 200, 300 pips a day, I would encourage you to avoid those pairs at that time. So here's one that's 137 pips, etc. Let's see. Aussie yen is about 146 pips. So again, that would be a little bit more on the volatile side as well. Aussie CAD will be one that would fit within the initial beginner range of 98 pips. So about 40 to 100 pips a day is good it's good pairs for beginners to start out on when they're self-trading. And why do I say that? The volatility is like is basically how fast and how much a pair can move for you or against you. Well, you don't have to worry about the for you part because gains take care of themselves. What you do have to worry about is the against you part, and because that's what can clean out an account. So I often liken volatility to somebody learning how to, like high volatility, I liken it to somebody learning how to drive a car, yet for some reason they get in the car and they want to learn how to drive the car some of their first times at the wheel at 100 miles an hour. That's your faster volatility pairs, your ones that are 150, 200 pip, 250, 300 pip gainers a day. And then I would liken your slower volatility, your slower and lower volatility pairs that are under, 100 pips or under, even on down to 30 or 40 pips a day, to learning how to drive a car at 30 or 40 miles an hour. Um, which do you think you're going to err, the worst on, trying to learn how to drive a car at 100 miles an hour or 30 miles an hour or 40 miles an hour? If you make mistakes at the lower speed, it's not near as detrimental. If you were to learn how to drive a car at 100 miles an hour and you made a mistake, you may never recover from that mistake. You could be hospitalized, you could die, etc. And this is exactly what happens in people's accounts. They uh, they start off with too volatile pairs, pairs that are too volatile for them. They end up wrecking, spinning out, and crashing and burning. Their account ends up in the hospital, all beaten up, banged up, losing blood, and sometimes even dying, being margin called out, and have their account go to zero. And so I also want to point out that you need to consider your number of lots as well. In other words, if I have one lot, this will move about 98 pips in a day. However, the more lots I put on, the more it magnifies how much I can win or lose. And again, wins take care of themselves, so losses are what have to be managed. So if there's an ATR reading of, let's just round that to 100 since it's only 2 pips off, just for ease of counting. And if I have 2 lots, now I could lose 200 pips a day. If I had 3 lots, I could lose 300 pips a day, rather than if I just had one lot, I would lose about 100 pips a day. So you want to keep that in mind, because a lot of traders stack on a lot of lots because they think, man, if I hit it big, if I do really good on this trade, I'm going to rack up. I might double my account. Yeah, it's true, but there's a huge likelihood that you're going to have some losers. And when you do have those losers, you don't want to be levered up or on extremely volatile pairs to where you lose all or most of your account while you're in that learning phase. You want your losses to be very minimal. And one way that you do that is by starting on lesser volatile pairs and keeping your number of lots very, very low. Trust me, when you're first starting out trading, you will not regret starting with one lot trades, one micro lot or one mini lot, depending on the type of account you have set up. So that's what I would encourage you to do, is look for currency pairs with lower volatility versus higher volatility. Start off trading lower number of lots versus higher number of lots. Thanks so much for watching Chart of the Day.